Thanks for visiting the lab today. Can I please get a screen and audio check in YouTube and the Bookmap Discord TraderLab community? Thanks, Marty. How are we doing in YouTube? And thanks, everybody, for visiting the TraderLab. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time, and this stream's about integrating Bookmap order flow tools with auction market theory using the volume profiles, a chassis in the intraday developing time frame. It's based on the trades I've shared in the Bookmap Discord community. TraderLab's open to everyone. There's no cost for it. And this is about the business of trading. If you're interested in creating potential sustainability, you need to understand how the market works, why it does what it does, how at times to get in alignment with it. And the reality of trading is nobody can predict anything. We're not in the prediction business. We are in the alignment business. And the idea is to use a high-tier order flow tool like Bookmap to help give us a more probabilistic process to get in alignment sooner than other retail traders, and to also integrate more higher tier processes like iceberg behavior, order flow, the limit order book, absorption, sweeps, other aspects of trading that create something called edge. The business of trading is not predictive. It is basically statistical probabilities in a random environment. Most of us retail traders, when we start out, we're looking to squeeze risk out, create certainty and predictability. And why would you do that? Because it's aligned with your psychological needs. It has nothing to do with this business. So the idea of TraderLab is to separate our fantasy of what we want or need the business to be to fit our psychology versus what it is. And if that's what you're interested in, you all have an open invitation to the TraderLab community, and there is no cost. Now, I want to give you just a quick caution. I am streaming from Costa Rica. I have a laptop that is kind of rolling over on its back and saying I've had enough. And high winds are here, power can go out. So I am on the edge of the jungle. And if I disappear, hopefully I'll be able to come back. But if I do disappear, I want you to know I appreciate all of you being with me here in the TraderLab. Now, the other thing is, this is a special stream today. I hope I can get through it. I'm going to give you the overview of how the market works, market mechanics, alignment, and where opportunity and risk always presents itself, and how at times to get in alignment. This is the key to sustainability in the market. I hope you get something from today. I'm going to be going over not only trade preparation, I'm going to be going over the actual trades that I've shared in the TraderLab. Some of these are advanced. Some of them are more, I don't want to use simple. What's simple, I think, maybe use a different phrase. Trading is not difficult, guys. What is difficult is the psychology and the randomness. We have to separate and redefine what's difficult. Difficult is fear. Difficult is FOMO. Difficult is always the uncertainty that always exists. Isn't that what's difficult? The other thing is we try to overcome that fear and the difficulty of randomness by trying to squeeze the risk out and create certainty. This is the ultimate dilemma. And it doesn't align with our psychology. This is where I think we have to diverge, and we have to understand the business and then create solutions to operate in this environment, but also psychologically determine or understand that there's no right or wrong as far as outcome. There's only right or wrong in the moment based on plan. That is the big secret, right? Not putting your energy into eliminating risk because you can't, not being right because there is no right except following your plan. That's the measure, not the P&L. The P&L is the outcome of following a plan that has an edge. Does this make sense? That's the question I pose to you. And if you're trying to accomplish something otherwise, to bend it to your needs, I think you're going to be disappointed. Just a personal opinion. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this isn't a trade calling room. This is about the business of trading, help you see how the market works, why it does what it does. I'm going to start out with the higher time frame, and I'm going to drill down, and I'm going to be going quickly. So review this stream if any of this resonates with you. And also use the link if you're visiting in YouTube to visit the TraderLab community. It's open to all of you. Now, I cannot see questions in YouTube. Apologies, but I'm very limited here in Costa Rica. All my external monitors are not working. Nothing is working. I barely have a working laptop, and I only have one screen. So I'm actually watching the TraderLab chat on a phone. Not good. Okay, so let's go. Grab a pen and paper. Now, let's take a look at the higher time frame, and I'm going to give you at least my trade plan. And again, it doesn't mean anything because there's no right or wrong. You're going to go, really? Well, why are you educating us? Because the real world of trading is not right or wrong. It's alignment. Let's take a look at this. These are RTH candles. Very exciting. This is our, and this goes up to yesterday. And we made a new all-time high yesterday and a new ETH all-time high. Very exciting. Okay. Now, given this scenario, we might think that we're going to continue today. What do you guys think? Right? So let's find out. Now, when you see these candles, this looks like a tail. That looks kind of bullish, wouldn't you say? I think so. But I'm going to add a little more to this. Now, I have to show you what I'm going to share with you is auction market theory. I'm going to rip through this very quickly. There's a lot of literature on this, a lot of information in the TraderLab as far as market mechanics, and a document section and a library of webinars I've done. They're all available to you at no cost, but I'm going to show you just a quick idea. In a higher time frame, we say we're in a bull market, wouldn't you think? Now, this is the highest time frame, and this is called the distribution of volume. On the outside edges of volume, these are called low volume nodes. And all it is the market came down and we didn't spend time because there's demand here. And then we rotate back up. That's what we did yesterday. Wouldn't you think if we found buyers here, we would go higher? Now, these yellow boxes are called value area. 70% of the volume on the day took place in here. We have an extreme down here. We have most of the volume here, and the market's up here. What does it say, Lewis? Going north. Okay. So when I come in today, I'm looking for longs. And you're going to go, really? Yes. Let me also show you why. Let's go a little further. So inside of each of these days, there's something called value area, where most of the volume takes place, and the high volume is like a retail price. I always equate this like shopping. If you know how to shop, you have the fundamental basis of trading, because trading is what's too low, what's too high, and what's a fair or retail price. That's what you do in the store. It's on sale. You throw 20 in the cart. If the price is too high, you say, I'm not paying it unless you need something for the tuna casserole. And then there's the retail price. Now I'm going to add another piece. These are called volume points of control, and this is retail pricing. Now you'll notice if you follow the stream, and you should follow these streams sequentially because everything builds on itself. Yesterday, which is there, we had longs in the morning leaning against what's called value area high for continuation. Also, the retail price from down here was here. So it was longs early, and then when we broke back inside the value area, which is where most of the volume is, and the ETH low, just to give you an idea, was right there, which was saying too low initially, then it was longs up here. Once we fell in, then ETH low became the target, and yet the stops under the previous day's low, then this. This was our target. And unfortunately, we got it at the end of the day. Who knew? But what we had in the morning was longs, ETH new all-time high. Who knew? But we have over 98% probability either for ETH high or low. Pick one. And if we don't go to the ETH high, let's take a wild guess. ETH low, which was there, out the bottom to there. And then we found our buyers, and we come all the way in. That sets up longs. Now I'm going to add another piece, maybe. Now I'm going to show you. So what have I showed you so far? High time frame, the daily time frame. Now I'm going to add intermediate time frame, and then we're going to move along. What this shows me, I'm going down in time frame. So think of it like this is too high, too low. Retail, high volume. So high volume in the day, high volume in the RTH, going up in time frame. I have similar behavior here, outside edge. It's here. So this is my outside, and if I can do is if I come down, I can look at it over here. So let's remember this 69, 68-ish. Then let's remember 45, write these down, and then let's remember under here 23, and let's remember 88 and 69-ish, 6907. Okay? Everybody got those numbers. Higher time frame, auction-based numbers. Now, is everybody with me? I need to know you're following. And you're going to go, well, who cares about this? I'm going to say is you need to care about it, because this is how you can understand change. Can you predict that the market might go down today? Well, if you can, I want you to DM me. I have no idea. Here's what I know. I know what change looks like. And if I'm in a position in the market or trading from a direction and I have defined change, then I can realign, and then I deploy the trades that are aligned with the current condition of the market. Now let's look what we did here. I'm going to come back to Bookmap now, and we're going to drill as fast as I can, okay? Oh, that's lovely. This is RTH open. Now, let's talk a little bit about statistical probabilities. Just a tad. So what are we doing? We're opening inside of yesterday's range at the edge of value. 70% of the volume took place inside of the value area. Yesterday's retail price is called the volume point of control. Remember your shopping experience was here, high volume, retail. So if I open here and I'm right at the edge of value, what does it mean? Well, we're out of balance. If the market's out of balance, it means we might be rejecting this. And there's another piece here just to give you something exciting so you can see how I put this together. And by the way, this is not about being right. Unfortunately, it's not. And then yesterday's low. There's stops at yesterday's low, but what did we do in the ETH? The ETH is the last auction. Also, don't forget this was our target yesterday. I left it in here. So the ETH came down, ETH low, tested this area. Everything is suggesting to me I want to be long. So, and then yesterday's high. And the new all-time high, don't forget yesterday, and then the ETH all-time high. So I have yesterday's high, ETH high from today, and that's interesting, ETH low from here. So my orientation, again, what? Long. Now let's look. I'm going to show you the first trade, and it's a long. And you're going to go, really? I'm going to say, yeah, because that's the condition. So let's go and take a look. Now, right here, it sets up a long, by the way. Now, this is the overnight volume point of control. What is that? It's the same as that, except the last auction is the ETH. This is the retail price. Now, what I am oriented towards is I'm opening higher inside of yesterday's range. Settlement's down here, right? Higher. That might be too low. And there's settlement. I'm opening here, and there's my retail price from the last auction. I want to go there, at least for my first trade. Higher inside a range. Write this down. And these are statistical probabilities. Past performance, not indicative of future results. You got to bet everything, right? So higher inside a range. Looking for the moon. Here's statistical probabilities. There is and these are available to all of you in the TraderLab, by the way, but you have to vet everything, and there's nothing mechanical in trading. I know, red light, green light. Wouldn't it be nice? Doesn't work that way, or else I'd have a red light, green light, and the tilt light that says, yellow. Don't have it. Red light, green light, don't have that either. The best you have is maybe. Write that down. Maybe it'll do this, maybe it'll do that, maybe it won't do any of that. How do we know change? You got to know change before change. You have to know where change might happen, and you'd learn that in TraderLab, and you have to define when it has changed. And let's get real. You won't know it has changed until hindsight. You got to be all right with that. Because how do we find out change? Structure breaks, we take a stop, or our jaw goes on the ground because what's going on? And then you got to take a pause, and because you have a trade plan, you already know change. You don't know where, you don't know if, you don't know when. How about that? That's trading. But you do know how to define it if you're in TraderLab. So probabilities, taking out the first hour's high or low, 98% probability. Taking out the ETH high or low, 97% probability. So what am I looking at here? I'm looking at this. Taking out yesterday's high or low. I want you to see how this comes together. Not what's going to happen, what might happen. Let me try to find yesterday's high or low. Wow, can't find it. Wait a minute. 82% probability. So, and the ETH high or low, almost 98% probability. Look at the high probabilities I have for going here. Now, there's only one more little thing. The retail price from the ETH. What's the probability, Tom? Almost 82%. So, I'm thinking, right? Open here at value, 82%, 98%, 80-something or other percent. Off to the moon, have a great time. New all-time high, get the champagne on ice. Not quite, but close. So this is the first trade that's a long. I want you to see. By the way, does anybody here who trades not take stops? Just want to know. If you don't, DM me. I want to figure out how you do that. What are stops? Is it right, wrong? How do you measure yourself in this business? Isn't it trade plan? And following it, not because if you have edge, that's the outcome comes from exercising the edge, not the random distribution of outcomes of individual trades. This is a sweep. This is resting liquidity. This is actually a long trigger right here. Let's look at this. This is a long. Now, the long happens right before the RTH open. Now, here's the ultimate question for you. Are you long here, or are you going to wait for RTH? And this is where the open's going to happen. This is your value area. This is your first target. This, and notice the resting liquidity and to the moon, right? Okay, first trade. Now, if you can't get on this trade, then you have no trade. Now, for me, it's longs. Again, the long was out here. If you don't trade that, that's fine. It means nothing. It's just now what you'd be looking for here is the higher. Now, how do you trade this? Well, for me, the way I would work this for continuation long, I know this is the opening swing low right in here. And what I know is if I'm outside of value, I only want to take longs. So I'm starting out, I only want longs, and I want to get outside to come back and go and take the ETH high. So this is my start. This is how I start. Now let's watch. I pull outside, and at the time, this is the full session VWAP. I can use this for a long to come back here to come out the top. So far, let's look at the context. I'm outside of value. I'm trying to get over here, which I've tested now, 82%-ish probability, and I'm looking to continue to the ETH high. Next, 98% probability, 70%, 87% probability yesterday's high going to the moon. Watch. This sets up reversion here. No range, can't do it, not qualified. So if this was further outside, And the better idea would be to take out the opening swing low, do a inventory grab, and come back across. So this is a long that it's not qualified. So I'm going, okay, no good, outside, looking for the longs. Watch. Now I have to be aware I have my value area here and I have settlement down here. If I fall inside of value, then I got to think about settlement, and that's around a 73% probability. By the way, if you're visiting in YouTube, thanks. I can't see your questions. I'm limited here. I'm in Costa Rica, and I only have the laptop monitor, and I have a failing laptop, so forgiveness, please. If you have questions, you can use the link in the bottom of YouTube. Visit the TraderLab. There's no cost for it. So I'm looking for continuation longs, and I have to be very careful of this. Watch. So looking for longs. This is my opening swing pick. So right here, I'm looking for longs. Okay. So I'm inside of value. This is buyers. Now I've picked these guys off under here. That's fine. And this is where the long would come in. And then this is called mean reversion. And the idea would be to come here. Because now I got the range, and if I come back here, then I can go on my merry way. Let's see what it does. Breaks low. Something's wrong. Look at that. So right here, it breaks. Now, to get long, what you have to do is, this is your trigger. This is your break. Now you have your trigger, and your long entry would be in this area, and your stop has to be under here. If you took, and this is called mean reversion, if you took this, you're trying to come across the range. What do? We get to the mid, and there's trouble. So if you took this, you take a stop. Now, look at the change. So here, now you're under this failed, and look at the selling change, and you're inside a value area. This is problematic here. It will come back. It's part of the problem with this. So now short. Now right here we get something called VPOC migration. I'm going to try to label these, and what this says is that the volume on top, or this is a developing retail price. It is tracking, that yellow line is called developing volume point of control. It's the same thing as this, except this is fixed because it's from the last auction. So it doesn't move. This one is developing, so it's moving. And remember, guys, if I disappear or this laptop crashes, I will restart and try to come back. And if you're in YouTube, it takes a few minutes. So this says, in the language of the market, and this is also important, this is a potential long that failed. And look at this. When it fails, right here is the what's happening moment. Break. And right here, don't forget where the buyers were. They were there. You see, the buyers are here. Not so much. Break low. Now what? Problem right here. Break low. So now there's trouble. VPOC migration. Now this can be a short, but it's a very aggressive short. And what I always suggest to traders is calm down, wait. There's going to be tons of opportunity. Here, let's take a look at this. This right here is a potential order flow trigger. Let's take a look at this. When we break here, this can be, you can lean on this for potential shorts. You get VPOC migration. And by the way, this is the retail price from yesterday. So let me get back here. So this can be, you can lean on this for resistance. Now, what you have to be aware of, let me make sure this is working right. Let me just check this. Guys, is this working right? Because I'm seeing some levels here. I got to make sure this is correct. This is what happens when you're having problems. Was there a VHVN at 10 3/4, TraderLab? Somebody? You don't have one? Okay, thanks. All right. So this is your variable high volume node. By the looks of it, I can't tell if it's accurate. How about this one? 6 1/4, 5 1/2. Yeah, I can't tell. This is an important level. This is your outside edge. We've rejected everything above. We've fallen back into value. I don't have any longs. So for me, it's only mean reversion shorts, which is outside in trading, trying to come outside for continuation. This is the areas for shorts. So all these are shorts. The next target down here would be value area low, but there's a little more here. Let me show you. So when you fall in here, then you're looking at this, and we know we have a high probability of yesterday's high or low. You're looking at this, and then you're looking at 45. And this would be a primary target. If you get below 45, it puts 23. And if you get below 23, we can come out here. But this is an outside edge 23. Once you're under value area low, here. So what you can do here is if you're getting short up here, you'd be going for value area. If you break below value area and you know the market got long yesterday and you have a high probability yesterday's high or low, you're going to go for yesterday's low. You also have a high probability of the ETH high or low. That's there. So you'd be trading shorts going for this, and you could sell this going for there. So this sets up a short here. You have this liquidity break here. You have this liquidity break there. You have this down to here. And there's more because we have yesterday's low, high probability, and we have 70 as another target. And don't forget, there's 45 in here also. So let's look here. So now what we have, now it's only 8:48, it looks like. So this has been rocking and rolling. Now, how do you trade this? Well, we have to look at, this is the current retail price. That's the high volume. We're running away from it. So the market's in price discovery. We have stops under yesterday's low, which is here. So the longs are taken out. Now, why are we back here? Wouldn't you think? What would you be thinking? Well, let me give you an idea what I think. What I think is the longs that bought here against this price, which was our target for yesterday, who knew, are in trouble. Where are the other longs? They're in here. Where are the other fair price for this whole distribution of volume from the swing low, which is under here, to this high, which is there? The highest volume is here. The market in all time frames is attracted to volume. That's why this was the low, potentially, to go up. And if we find too high, and the overnight volume point of control turned out to be the high of the day, just about too high, where am I going to go? Take out these guys, take out these guys, come back here, and what about the stops under here? That takes us to 23, you see? And then whatever, after that, I don't know. And then what? I have another level, which is down in here around 6,900. But I'm not concerned about that. I have no idea. For me, 23, and then what happens under 23? Because I'm taking these stops out, and there's a wick here. And if you guys follow the stream, on this day, I was trying to get down here. Neither here nor there. That was my target. Didn't do it. And that trapped the shorts that were in here. Now the longs get trapped, and down we go. And nobody knows. So let's not get into this. I knew it would do this or that. Well, if you do, again, let me know. So yesterday's low. You'll get short covering. There's a sweep. Now there's a counter rotation. Now I posted in TraderLab, at least, and again, it doesn't mean I know anything. It just means alignment in different time frames. There's going to be some traders who are going to get long. Me, not so much. It doesn't mean they can't be profitable, but let's assume the trend is down. What I do in a downtrend is look for continuation trades. So when I see the longs, they're trade management opportunities for me, not longs. So I cover, and then I look to put the short out for continuation. Why? Because everybody who's long is on the hook. I want to use the sellers. I want to align with the sellers. So when I come out here, now this one is tough because you're trying to come outside. Where's outside? Well, I know my sellers are here, and I know I had a sweep and it failed. So I can look over here. Now, this is a very aggressive short, and unless you're very experienced, I would suggest you don't even think about it. Because you're trying to, it's like, which one of these is the right one? Is it here? Where is it? Where's the sell? Here's the sell right here. But how are you going to know that? You won't until hindsight, because you've got an outside edge up here. No way to know, because we could pop up in here. So if you're looking for a short continuation trade, you might not be able to read this. It takes a lot of experience to take this short. But let's assume you don't take it. And now you're going to have FOMO, right? I should have sold it. Really? Well, if it's not in your plan, you should have done nothing. This is called VPOC migration. This sets up a possibility. Hold on. Whoa. If this is too high and I break, and don't forget 70, I should say, is a outside edge. I'm under yesterday's low. I'm under the ETH low. I'm out of range. If I break out and come back, and now the high volume is here, the language is saying this is too high, outside edge, break, new retail price. Now, right here is a potential short in the TraderLab. And you have to be conscious that this is the outside edge. If it doesn't qualify, you don't have a trade, it's not a big deal. Subject to your ability to read it, this is a trigger. It's right here. There's resistance. There's your liquidity, and your icebergs are over here. If you can't take it, nothing to do. Now you're feeling FOMO, aren't you? Watch. Now, only trades that exist for me are shorts. We have the following. This might be too aggressive for you. No problem. We have something called the IB, which happens at 9:30, which is right here. It's called remember, over 90% probability to take this out. Let me explain. Let's say we're approaching this in the market. The trend is down. I can be taking continuation shorts towards this statistic and towards this. because this is my next target. So I can be taking shorts here because of statistics. I've been using counter rotations for continuation lower. So these are all short coming up here. Watch. So what do I know? If I sell this or sell this, I have the IB stat, and I have this here, target, and it's a low. Okay, so, and now if I come back up, what I know is I have my IB, I had my buyers here, and they failed. I'm below them. I have an outside edge up here. I have the IB, and I have this. So now I have my liquidity come in, and I want to see if I can get a continuation trade short. There you are. Let's see. These are not trade recommendations. I haven't seen this until now, so I'm just following the yellow brick road. Now, remember, the possibility is that we've gotten extreme. So all you can do with this is look at locations, look for triggers, get risk neutral. So right here is important. If you're looking at potential rotation, you have to do something with this over here ahead of the IB, and then you got to see if you continue or what. Let's just see what it does. So you're looking here to see if you get a trigger. So it's going to be right in here. Let's see if you get it. This is all very important right here. These are not trade recommendations. What I do is I wait for an area, and then I look to see the behavior. That's as deep as it gets. So let's look. I'm going to open this up a bit so we can see it. By the way, if I crash, remember, I will try to come back. This computer is not into this. I'm above the VWAP, so I have nothing here. I'm above this liquidity. I have to get under that. I'm not under it. I have nothing to do, and I'm coming outside. And we're back inside the IB. So there's two possibilities here. For me, I have no longs. A counter trend trade would be a long, and it's called the IBF. It's a reversion trade. I don't take those in this context. I only am going to look for continuation shorts. So the way I perceive it is that short covering, those buyers are not strong buyers. So when I get squeezes, I want to use the squeezes to come outside somewhere for continuation selling. And I would be coming down here and then see what happens. And again, it doesn't mean any of these will work, right? What I like to do for developing traders is slow them down. And because you need to anticipate the locations, not get hung up in the adrenaline and the FOMO, which is very easy. If you slow yourself down, your risk stays pretty constant. But if you can get in alignment and you are going to take stops, you want to try to slow down and get the bigger rotations. That pays for your stops, which you will take. We all do. So then it's a matter of, if you put risk on, you want to have the opportunity to get paid for it. So this right here is very important, what's going to happen right in here. And it can come up here. So we just have to be patient here. Your outside edge is out right here. So what it can do is it can come up here and come back down to there and maybe down to there. So that's where I would be looking to see the behavior. I also have to remember the market is short and we can squeeze. I got to look left. Yeah. This is hard. the graphics card does not go for this. So we're just going to keep an eye on this. This is kind of, this would be a very aggressive trade if you took a short here. And the reason is that we're above VWAP. So this would not be, and you're above this. This is a key piece right here. For this to go down, it's got to get under here. So let's just watch it for a minute. The way the market tends to work is it rotates over itself in all time frames. So if the market got long, very long, which it is or was, then it can go down and wipe everybody out. Now you have the shorts in the market. Now the shorts can get squeezed. They become the buyers. It's always going to rotate over itself. So you have to always be conscious of that. If you don't have a location for a trade, you just sit back and wait for it. Again, this has to get under here. So you have, this was resistance, it becomes support. This is resistance, it can become support. If I can break below this and test it, I can come down to there. If I can get down, and that's the outside edge. If I can get out there, then I can go lower. If I can't get below this or below this, then I can go there. That's what I know. I don't know what it'll do. So this is not anything more than a area to observe. There were more shorts, but I didn't want to really get too short term for you. The most important part of this, I think, is knowing change and waiting for your trades. Most traders that I know over the years are not spinning around, getting long, getting short, depending on the condition. If you're in a balanced condition, you can trade both sides or just trade a dominant side. When you get out of balance, which is what this is, then it's trade with the dominant side. Don't take the counter trend trades. Be done. At least my opinion. Trying to fade this, you may catch the trade, but along the way, you can put yourself out of business. I've seen it happen so many times. And it's just a matter of defining which trades are qualified in which conditions. Remember, this is the IBF, and it can revert. So this is reversion. And again, it's not a trade I would take. It's just not important to me. So let's see what we get. I have to look. So we're outside of yesterday's range. So we have to see if we come back, what happens here. If we test it, we have low volume up here. So we can come up here. And I don't know how far it's going to come. It's not my job. I got the mid. There's going to be stop. There's stops at the VWAP in the mid. So we want to see what happens up here. We can anticipate potential buy stops here and potential sellers. Let's see what it does here. Boy, this thing is giving me trouble. Liquidity is resting up here. Just have to be patient. There's nothing to do. Just sit and wait. Remember where the stops are. They're going to be at the mid. Now we have to see what happens up here. These are not trade recommendations. This is what we are potentially going to get here, potentially, is a pop and then potentially reversion back here, or not, or a continuous squeeze, and I couldn't tell you which one. The outside edge is up in here. So you want to see what happens. We can anticipate a rotation off of here, potentially, down to here. And then we got to see. Stops are here, so we got to look. For me, I don't front run this. I don't care. If it comes here to there, it doesn't matter. I know there's buy stops here. So often what happens is we're going to get mechanical sellers, and they do get paid. And this is where you'd be going. But I find for me, the trade is better if I get these guys in and then we take them out. And then if I run out of buyers up here, then I want to think about, see, let's watch it, okay? And these aren't trade recommendations. It's just market mechanics. And the other part of it is, if it doesn't do something, it doesn't matter. If it matters, then that's your FOMO. It doesn't matter. It's always a curiosity, you know. That's a micro trigger. I would not take this. And I don't call trades. You can take it. I don't take it. Because what I'm looking for is the sellers to get squeezed. Now, if they don't, they don't. And there's liquidity resting up here. If I can squeeze these sellers, then I want to see the behavior up here. And either these guys, if we come up here, they'll pull, or they're going to stay in the book and sell the buy stops to come out above this swing. Let's see if it happens. And it doesn't have to happen, of course. So let's see what it does. You guys have questions? Is this making some sense? Let's see what it does. So part of this is understanding retail trader behavior. And remember, everybody gets paid. So I'm not saying there's a right wrong. There isn't none. For me, my plan is not to take this trade. So I don't take it. I find the trade, for me, is better if I can get above the mid and exhaust, because the mid will have stops. So that's how I trade this. Just me. And if it goes down to zero from here, I have to say, well, I follow my plan. Though the lunatic, Hyde, as I call it, is going to be judgmental in hindsight. You know how that goes, right? I shoulda. Well, if your plan says you don't, then you shoulda nada. So let's see if we can get these guys out. One of the reasons I don't take a short here is because I have taken shorts there. And I kept looking at it going, gee, sell the mid, sell the mid. It works a lot of the time. But I found, and again, not a recommendation, you have to vet this, that this is not a trade that's good. Now, it could be good and it might work, and I might get into it and get risk neutral. Okay, that's all fine. But suppose I only get that and then I get taken out. Then I take a stop. So I want the stops to come out. That's my thing. Win, lose, right, wrong. The right for me is my plan, not the outcome of this trade. Very important. It's not the outcome of any individual interaction with the other participants. It's all based on market mechanics, understanding retail trader behavior. Write this down. Think like a retail trader. Don't act like one. What do? They sell the mid. Well, I think like a retail trader. I don't want to act like one. Where's their stops? Here. Now what? Let's look. There's my liquidity. There's my buyers. The sellers absorb them. Those are icebergs. Now I got to see what happens right here. And if I do get a short, and this is not a recommendation, I'm going there. Not a recommendation. Let's observe it. And if I don't get a trade here, then I have nothing to do. But I did not take a stop, right? Now let's watch. This is what I got to be looking at right here. Not a recommendation, just following the yellow brick road. For this to work, it's got to get below the mid. Doesn't get back below the mid, it's going to continue to squeeze. Where is this? Got to get below here. If it doesn't get below there, it's not going. So this one is no good, from what I can tell. Let's watch it. Got to get under here. This is the outside edge. So what we're trying to do with this is it's a reversion trade. So what we're trying to do with this is come outside to come back here. That's reversion. And if we can't get back there, then that's that. That's one trade, and that's the end of that. So this looks like it's not working. Let's see. Got to go here. This is hard because of the volatility. Let's see. It's got to get under here. Andre, I don't use CVD. I don't use it because to me it's just it's cumulative. I'm trading rotations. So what I'm trying to do is identify, and in other words, I look at the delta here. And for example, if I have here aggressors and then exhaustion, break low, I can take this and I can use what I read right here versus looking down at some average of something, So I don't use it. It doesn't work for me. I'm much more micro oriented, like here. Why didn't the market go down here? There's the sellers, but there's absorption. And what about this? There are sellers there, but it's the mid. I mean, this to me is a throwaway. If you sell this, anybody, this is like throwing dollars out the window. So I don't sell it there. Now I could still take the trade and take a stop. That doesn't change anything. And for me, this is where I would be trying to go with it. And that trade wouldn't work anyway. No, but to answer your question, no, I don't do that. So now there's nothing to do. Just hang out. Let me look a little further around here. One of the things I'm having a hard time with here is looking left. I got to look left to see where the other swings are. They're out here. Okay. So there's buy stops over these swings. Now we have to find out now, do we get more buyers, or are we just squeezing out these shorts and then we run out of buyers? And that would set up a reversion. So we have to look here. So I don't have anything to do here unless I'm a scalpy kind of trader, and I tend not to do that. I mean, if I do something in here, I'd be trying to come back here, but it's better not to operate in this, I think, for most traders. I'm still under, let me look here, way under yesterday's low. I don't have longs. As long as I'm out of range, I'm going to be thinking shorts, and I'll be trying to trade reversion. I'm not going to be trading any longs. I'm not saying you can't. Me, I won't. I just try to trade what I think is the trend, and I'm going to be trading outside in trading. It's called reversion. And in reversion, what's hard about reversion trading is that you're trying to pick an outside edge. I find that's a bit difficult, but not. But that's why if you take a reversion trade, you have to accept that you will take stops because you're trying to find an outside edge, and it's pretty important. I try to do is get squeezes. And this is where you're always, this is the reversion. So you're always trying to come down here. That's what this thing was. I believe the last one we talked about was this one. Didn't get there. Okay. So the idea of reversion is to try to come here because this is the fair price. So it's an outside in trade. And again, I'm only talking about what I do. I'm not saying this is a good plan. In TraderLab, there's traders who are taking longs, you know. So the idea is whatever this sets up the sweep, the location, a trigger. You have to get risk neutral. Then you're going to try to go here and then wherever it goes. If we keep pushing up, then that would get me off of it, off the shorts. And then, especially if I can't get back here to the mean, then that's it. Then I'd just be done, you know, for now. You know, same with this one, you know. Basically, what you'd be doing is you would get short, you'd get scaled, you don't get here, you'd scratch. You take this side of it, you get scaled, you're not getting here. This is important. You would scratch or manage whatever you're doing. But let's assume they're just scratches because you're not, and this is a key piece, you know. That's why this, you know, I couldn't take this one. This one, if I took it, that would be a stop. I take it again. I get a scale. I get taken out. Take it again. Not getting back here. That's kind of the canary in the coal mine. It needs to get back here. If I'm not coming back here, then it might be too low, and I can continue to squeeze. So then I have nothing left to do. Just me. Oh, I'm getting the question why I went to short-term trading. It's I started out when I was managing funds, and it was swing trading and position trading. I was a long-term trader. When I was managing money, there's no day trading, so you know a lot of currencies and all asset classes didn't matter. S&Ps were the only short-term thing I traded, and that was 2 to 3 day swings. That was the big S&Ps. That was before we had these minis. So that was short-term. So there was no day trading. Not as the way we know it today. And there was no technology for it. But as the technology evolved, and we got the data, we didn't have data either. You know, it just we didn't have it. There was no tick data. There was really nothing like that. And then eventually you did get tick, but We didn't have domes. It just was all different. So as the technology changed, though, I just took what I learned from position trading and modified it. Um, I used to use time frames. We didn't have order flow, so I used the same stuff everybody did, and indicators too. So I used indicators, then I built trading systems to try to fix the indicators because they're defective, they're random. So I tried to optimize to solve for the problem of indicators. And squeeze the randomness out. And after a number of years of doing that, I still couldn't overcome the problem. So anyway, so I kind of gravitated away, and I had my own company, so I was managing money, and then I decided just to trade for myself. But at some point, you do that long enough, and you just say, well, it's okay. I mean, I had an office. I mean, it was pretty involved, actually. So you could just be done right now. You could be flat. You don't have to be doing this is noise. So there's nothing to do here. I'm above the VPOC. It still could revert, but I just see noise and chop here now. And so far, I haven't gotten back here. We tried twice. The buyers are right here, which has given us these rotations. So this is not a good thing to be fading this now. So it doesn't matter to me what happens. This is kind of my thing here to be doing this. And if it can't do something, I have a thing I figured out years ago, and it was kind of like if this, then that. If not, then what? If this is too high, then back here. That's reversion. But what about if not? Two shots. If not, then what? Then potential squeeze. Does it mean to get long? No, it just means for me not to take shorts here until I get some information that suggests shorts are okay now. I can't pick the outside. I can suspect the outside because that's all I got. But when I'm not getting here, this was like the last shot, for me on a trade. I'll give it 2 or 3, and if it doesn't work, that's it. Anyway, I hope it answered your question. I don't take overnight risk either. I prefer day trading. When I was position trading, believe me, there were a lot of sleepless nights. I mean, this will sound kind of weird, probably, but when I would go to the restroom, I had a portable, quote, ticker. It was like the size of a large calculator, and it was radio oriented, and it would show me the quotes, especially because I was trading the large S&Ps back then, not the minis. So that'll give you an idea what that was like. Talk about a little bit of stress. But that I would swing trade those. I mean, 2 to 3 day swing. So that was as short term as I got. So nothing more here now. You traded the short side today. You had a pretty nice day. But I have nothing here. This is just noise. So I don't have anything to do. I just sit back with this. I don't worry about it. What's important is being in alignment and recognizing change, defining it, and then recognizing change and only taking trades that are in alignment. And if alignment changes, look at the buying we got in here now. Outside edges out here. This is your outside edges. And this you could also get here. We didn't do it. And notice the buyers are back in here. We're back above 45. So this is done. So you don't have to do anything else now. Now we may rotate, and that can give you some rotational trades, but basically we found an excess. So for me, I don't do anything with this as a day trader unless it gets rotational and I have structure. Then I can trade rotations. Otherwise, I don't do anything. So you understand what we're looking at in this time frame. This is a low volume outside edge. Going up in the higher time frames, this is the outside edge, and this is an outside edge. So coming down, 23 was a target, and there are stops under here. Once you get under here, then you have the next layer down here, and then you have another one down here, and then another one. You can see how it kind of works. So if we don't get somewhere, and nobody knows where that is, at least I don't. I do know that this is an outside edge. And if I come back above here, I can come there. And if I get back above there, I can just rotate back up to here. So that's all I got to do. And then if I don't have a trade, I have nothing else to do. Where are we? Are we all the way up here? Oh, this is a low volume area. This is called a single. So there's no trade in here. The market can come up in here, and subject to, we can revert back here. So we have to just see behavior now. Let me see if I got this right. Yeah. So this is where we're going to look and just see what the behavior is coming up. So anything here would be just, we're squeezing, and if we took a trade, it would be back to here, but it also makes sense not to do anything. But let's see if we can see it. None of these are trade recommendations. We're just looking for behavior. This is the low volume area. It's outside over here. That 95 is potentially an outside edge, low volume. We can come up into here, and if we don't get up in here and regain yesterday's range, we can come back here. Let's just see what it does. And none of these are recommendations. Shorts are covering now, and we don't know how far it'll go. This is the trade. If it happens, it would only be to here. And it probably would, if it's going to happen, it would be out in here someplace. Let's just see what it does. And these are not trade recommendations. I have to stress that because the market is, the shorts are getting squeezed here. The thing you don't know is, will that continue and we come back in yesterday's range? But we have liquidity sitting here and we have an outside edge. So there's some alignment. Now, the thing with liquidity is you don't know. Are they going to pull? Are they going to interact? It's like Pac-Man. So we have to watch this behavior up in here and see if we can come back here. That's about it. That's all there is here. It'd be reversion. So just sit and wait. What's the pillow factor? Oh, you're saying a lot of traders go from short-term trading to longer term. Well, it depends what you call longer term. You know, it's all in the eye of the beholder. I consider what I do here longer-term trading. I used to be a high-volume scalper. I mean, I went through that in the dot-com crash in around 2000. You know, I was trading like 100 times a day. That'll get you. You know, and that requires really immense skill and in the NQ, by the way, because of the volatility. But that's not really, and I got in a situation because of the volume that I had to either get a membership, And I was really just not inclined. I said, I don't want to keep doing that. I had to slow it down because it's too much wear and tear, too much exhaustion and fatigue. And the fatigue is you only have so much processing power in your brain from a cognitive point of view, and then it's easy to start making errors. And that was rather short-term oriented, but trading the rotation. So I kind of went the other way over the years. I said, well, I want to take less trades because my risk is constant. But if I can take less trades, I mean, I went from one extreme to the other and then back again. So I went from position trading, I could hold trades for weeks, to short-term S&P trading, which for me was 2 to 3 day swings. So that was a mix. And then eventually just day trading for myself and higher volume trading, and then back again to more rotational trading. So I just kind of went through different things where I tried different things. Tried to automate a lot of this too. So I tried to create systems to do it. And I've done a lot of work in that area over the years. But I found that at least at the time, I couldn't build any system because I was doing optimization processes. It was always behind. And when it comes to changing market conditions, like what we see today, a system is too slow because it's always in hindsight. In other words, when you're doing an optimization or detecting change, it can't detect change until it has enough data. Well, then it's always behind, So I kind of went back to using my head, if you will, or my brain, that processor, which is much better than what I could build at the time with systems. So I didn't want to be a scalper. Just didn't want to do it. No, I couldn't sleep, SD. At one point there was a quote. I had a portable quote machine. And what's the point, And then when you actually manage somebody else's dollars, it adds another level of stress. If you want to know about fear of loss, try doing that, because now you're not only trying to, you're managing the money, but you also have to be able to explain what you do to people who are investors. It's just a different element of pressure. It's the worst. So it didn't matter. It's like, who wants to do that? So this is reversion, but if it doesn't come out to your level, you don't have a trade. This is reversion trading, you see. But the hard thing with this is, where's that outside edge, So this requires a lot of skill, I think, because this is the reversion. You see where you're trying to go? So I find when I trade reversion, it's very easy to take stops in it, you see. So I can tell you what I would do. I can tell you there's an outside edge right there, but look, it didn't get there. What am I supposed to do? I have the sweep. That tells me to be looking for it, but why not there? So this is a structured trade for me. And, if it doesn't fit, I don't take it. But there's the trade, you see. But if it doesn't fit, I don't take it. Now, subject to but let me tell you what I would do, and it's not a recommendation. This is a trigger, but my stop's got to be out here above this, because that's the low volume node, the outside edge, and above this, which is a higher time frame, low volume area. Let me show you so you can kind of see how I put the pieces together. I'm not saying this is a good idea. I'm just saying it's a trade. There's the outside edge in this time frame, higher time frame, right there. And it's around 70 or whatever it is. So if it's there and I come outside, this is the developing daily time frame. I'd be looking for shorts to revert back to there. And then I can come back here. This is all multiple time frame reversion. So a short from out here to there is reversion. A short from out there to there is also reversion in a higher time frame. Is this making you crazy? Remember, I was saying here, this is the outside. If I come out here, I'm looking for it to come there. This is what mean reversion is. If you're in TraderLab, you would learn to anticipate these trades. I'm not saying you should take them, and I'm not saying you won't take stops. How can I say that to you? But I can tell you, I understand how the market works, but I'm just like you. I don't know exactly what it's going to do, but I can identify behavior. If I understand market mechanics, I can anticipate behavior. And I can anticipate areas of behavior. So I can do all of that, and you can learn that. Now, how do I enter the trade? How do I manage it? That's where you get your screwdriver out, and you need to anticipate where it might happen. That's what I can tell you. Is this useful for you? I don't know. Works for me, but my stop's got to be out here. If it doesn't fit your risk to get there, and isn't this the same trade? Let's look at this. Isn't this the same trade trying to go there? Isn't this the same trade trying to go there? Isn't this the same trade trying to go there? See? Aren't they the same? What makes them different? Well, the only difference is outside reversion trading. So what I always suggest to traders in TraderLab, the most important trade to learn is mean reversion, because most of the time the market in all time frames, as you think of time, and this is not necessarily time based, the basic behavior of the market is to revert. That means, let me show you reversion. Now, it's tricky because you're going to get stuck like everybody else, so we got to get over it. I know. Oh, I don't want to take a loss. I get it. Who does? Here's another way to look at this. You will take losses because that's part of trading. You also have to change how you experience a loss. What is loss? Overhead and cost of production. Is it a right-wrong thing? Is it I'm smart, gee, I'm not smart? Is it a hindsight thing where you go, oh, I didn't do it and I shoulda? Yeah, excellent. Well, what about the other places where you shoulda? Do you take those too? What happens if you take this one and or this one, you could take this, but the range is tight. You take this one, you take a stop, and then you're going to go, I shouldn't have taken that one. Or you take this one and it doesn't get under here because the buyers are here. Who knew? Why would this one work and those not work? Can anybody tell me why? I'm going to tell you why, because it's random. Does that mean I don't take this trade because of what happened over here? For me, no. I'll take it again because I know I'm probing for location. I don't know. So as long as my plan tells me that I should be trading shorts because I'm outside of yesterday's range, and let me come back to the basic premise, I'm not taking longs. I'm not trading counter trend. I'm trading in alignment with the trend. I'm waiting for shorts to get squeezed. Now, this is my time frame, not yours. I'm not taking the longs. I'm letting the shorts get squeezed, and I'm trying to go for continuation trades because when I'm outside of yesterday's range, I'm trading reversion. It's just a time frame. It's not a right or wrong. Does that make sense? And where would you try to go with this thing? There. And why not down to VWAP? Or wherever. I don't know. Do you? Where was my buyers? Here. Might I try to go back here or there and be done with the trade? I could be done with the trade. I don't care. You? You care? Do you know where it's going to stop and reverse? I don't. If I don't know that, then what do I do with this? Here's what I do. Sellers are there. Buyers are there. Break low. What happened here? My buyers got taken out. Where is that? It's right there. Sellers are here. Sellers are here. Break low. Where were my buyers taken out? There. Buyers are there. Sellers are there. Break low. Sellers are here. Buyers are there. Break low. Resistance is there. Break low. Sellers are there. Break high. You could be out of the trade here, or higher time frame. You're back over here, and you're still holding. What is your trade management plan? What is your time frame? Where are you trying to go? What's your plan for this trade? Here's the thing. If you were on the trade desk when I was managing a desk and I had traders, I'd be asking you, what's your trade plan? How do you manage this trade? Are you micromanaging it? And this is what you're looking at, the VWAP? What happens if you get under here? Isn't this the potential target down here? Because it's what? An outside edge? How does this trade work? How does this trade work? Do you know how this trade works? It's called mean reversion. Underline the term mean. Outside in to outside. Where's the stops? Here. If you're in on a desk with me, you would either be out of the trade because that's your plan, or you would have your stop further outside because you're going where? To the outside, which is here. Let's see if it does it. That's the trade. Tommy, do you have a question? How would you identify a stop run without stop run tool? Tommy, how would you identify a stop run? Look left. What do you mean? Okay. Yeah, Tommy, stop run, you're going to see them if you have, you're going to see excess, and the differentiation between stops are buyers, okay? The difference is with stops, if you don't get buying above a swing where the stops are, and most stops pile up at outside edges. Stops are going to be above here. Look at this. This is weak. This is not good. Okay. And then I can look at the profile, and I don't know where it's going to stop. You know, this is one of the thrills. So, part of when the answer was look left, you're looking at the swings. And of course, the problem with that, Tom, you don't know. So when I see the sweep here and I'm at my outside edge, this is where I'm stalking my short. You know, and there's no precision with this, part of the thrill. But I also have this location here, which I know is important. I have this liquidity come in, which is icebergs, limit passive sellers, and with the and I have the sweep. This is my trigger. And then this is just a trade. This is here, outside to outside. And the trade can be over. And that's it. You're back in your Barca lounger. Tommy, I hope that answers it for you. Yeah. Does that? Here's the sweep. Now let's look at behavior. Up here, we had a sweep with the liquidity stacked. Here, I'm coming down to my target, which is the IB. Now, here's the possibilities. Trade's over, back in your Barca lounger. Why would I take this trade? Because my plan says no longs, unless I'm a counter trend trader. Now, what I do is really not important. What's important is that everybody who comes to TraderLab can build a plan and sustainability. But my objective in TraderLab is to slow traders down so they can become intentional and stalk a trade. Go, where might this thing show up? Well, maybe out here, and maybe out here, outside edge. This is what reversion trading is. It's the most important thing to learn, in my opinion, because let me show you micro reversion. If you understand how the market works, and this is kind of, I'd say, important, you would understand not what will happen. Let's forget it. Not happening. I'm going to try to show you this. Now, again, I don't know. What do I know? Right here, I see the sweep. Here's volume. I don't know. My buyers are here. There's absorption. My sellers are here. Why are my sellers here? You're saying as I see green delta. Why didn't it go up? Because there's passive sellers here. And why didn't it go down? There's buyers here. So I got buyers, I got sellers, sellers, buyers. Support, resistance. Support, same thing here. Sellers are here. Break high. Buyers still in control. What about over here? Buyers here. Absorption. Sellers there. Buyers here. Sellers break high. Sorry, Charlie. Next, sweep. Looking for a short. Outside edge. Where? Don't know. Buyers here. Sellers here. Break high. Going to the moon. This is my area. Don't know. Sellers here. Buyers here. Buyers here. Break low. Right here. There is my volume. So, and then if I go up a little higher, right here, I got my buyers. So I got buyers, buyers, buyers. I'm under these buyers. I'm right here. It's like either up or down. So right here, I could sell it, but my stop's got to go here, and this is where I'm going. And then it's IB and or trade management or whatever whatever your plan tells you to do. I can't tell you because I don't know what you're going to do. Anyway, that's a short. What can I tell you? It might not be yours. It's mine. And I just have to deal with it. And there's the target. That's the end of it. Trade's done. Go back in the Barca Lounger. Let's look. Now, sell sweep, but this is my trade. This is a structured trade. Let's look a little further. Let's try to see the reversal. I'm looking for the reversal right here, but I have a target, and I understand market mechanics that there's going to be stops under here. I'm coming down. I have a sweep here. This suggests to me lower. I get absorption here. Break high, but I got my target. I have a resting order here. And now I get my sweep here. This suggests counter rotation up. Same as this, but where's my counter rotation? Didn't happen. All right. Target, trade over. So this trade is from where? There. To there. That's a structured trade in the TraderLab. Now, it might not be your trade. That's okay. There's also another entry here, but this is a bit different, and this would be much more aggressive. Under here, different. This is a different kind of trade. It's really not. I probably shouldn't even be talking about it, but this is a different animal. It's not a structured trade that I share. So this is just a reversion trade. That's all this is. Learn mean and reversion. There's the mean, there's the target, and then if we get under here, we can keep going. Now let's think about this for a minute. Do you want to be taking longs? You can if you're a counter trend trader and have a statistical edge. Do you want to just align with the trend? Then you're only taking shorts. What's the best thing for you? Hope you're having a good day. Hope you got something out of today. There are a number of trades that I did not share that are available in the TraderLab. I only want to share in this stream the broad strokes, how you develop patience, alignment, self-management, and sustainability. The goal of TraderLab is to get you to sustainability, and then you can develop. If you don't survive, there's no point, is there? The idea of TraderLab and why I've created TraderLab and work with Bookmap is to help traders sustain themselves, understand the business, overcome the psychological impediments, which is going to be your biggest obstacle in spite of what you believe it is. It's not setups. It's nothing. That's easy. You are the problem. You are the challenge. And it's because you're not wired to operate in this environment. So you have to learn basically how to operate in an alien environment. If that's you, you have an open invitation to TraderLab. There's no cost for it. You can use the link in the bottom of YouTube. There's a library of webinars, and of course, the TraderLab community. There's a lot going on in here, a lot of interaction and mutual support. TraderLab is built for you. It's a group of like-minded traders that come together to leverage their collective experience. If you're interested in that kind of community, it's not romper room. It's about the business of trading. You're all invited. Again, thanks so much for visiting TraderLab. Thanks for your patience. If you're in YouTube, please hit the like button. I am streaming from Costa Rica, and I'm very handicapped here. I only have a laptop that is on its last breath, and I can't read the chat in YouTube, but hopefully we'll remedy that very soon. Take care, everybody. Look forward to seeing you tomorrow. Thanks so much, everybody, for visiting and supporting the TraderLab.